The expectancy for that is 0, okay, which means we can't expect to make any money over time. Now let's just start to play with some of the numbers. Let's go ahead and put 8 over here. Then we'll put 2. And then the risk over here, we can keep that at 0, or if you would like, we can put that at 22.5 just to keep the numbers basically even. Now you can see that the expectancy is very, very high. Okay. Now what this expectancy is telling us is that, number one, we can expect to make money over time. But we've got to really put this into dollar terms. So what I'm going to do here is I'm going to divide this expectancy number by the dollars that we are looking to win, and we're going to get a fraction or a decimal. Okay, let me go ahead and we'll put some dollars on this. So essentially what this is saying is that for each dollar that we put in, we're going to make $1.31. Okay, so let's talk about what does this mean? Well, this means if we have a system that wins 60% of the time, where we take 8 lots off at 15 pips in profit, and we take 2 lots off at 97 pips in profit, that if we risk these 22.5 pips to get that the 40% of the time that we lose, when you crunch all the numbers, that means if we put $1 in over time, we get 31 cents out. So you have a positive expectancy. Okay? Now as we start moving some of these numbers around, let's go all the way over here to 40. Whoops. And you can see, sorry about that, I had to make some minor adjustments just for the sake of the video. But you can see here, if we start at 40% now, where we're only winning 40% of the time, I really want you to focus on this. That if we're winning 40% of the time, which means, whoops, there we go, sorry about that, I had to make another adjustment. So that means we're losing 60% of the time. At this point, with these particular numbers, it's very important for you to remember, now we're losing money. If we go up to 45%, now we're back to making money. But you can see that at this point, when we put $1 in, we're going to get $1.05 back. Okay, so you can see the profit margin isn't as great there. So when you start talking about what's the best stop to use, or what's the best profit target to use, this spreadsheet will help you to understand what some of those numbers are. And really, the best suggestion that I have for you is to just play with the numbers. Okay, don't look for a one-size-fits-all answer, because you're never going to know. Okay, and tomorrow is promised to no man. It's a very solid foundational biblical principle. We don't know what the future holds, but we can use something like this expectancy exercise to give us a good idea of what will happen if. So instead of just looking at this and saying, well, how much money can I make? Let's look at this and say, well, what happens if I lose 40% of the time and I win 60% of the time? What happens if I win 75% of the time and I win or lose 25% of the time? What happens when, instead of taking 8 lots off here, I take 5 off and then another 5. I change this to 20 pips and I change this to 67. Okay, you can see the adjustment.